This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending March 27, 2021. Our question this week is, what are US Treasuries? The answer will be provided later in the video. This week, the market ended up. The Dow Jones Industrial Average increased 1.39% on Friday and was up 1.36% for the week. The S&P 500 increased 1.66% on Friday and was up 1.57% for the week. The Nasdaq increased 1.24% on Friday but was down minus 0.58% for the week. Looking at the week, we can see that there were 9 up finishes versus 6 down finishes for the 3 major indexes. On Monday, Thursday, and Friday, the 3 indexes were up. On Tuesday and Wednesday, they all finished down. Even though the Nasdaq finished up on Friday, the technology sector is still struggling. It looks like investors are continuing to rotate out of technology stocks. The new unemployment claims were 684,000 versus 735,000 expected. Continuing unemployment claims were 3.9 million. Existing home sales fell in February. New home sales also fell last month. Despite falls in home sales, mortgage rates moved higher. And a cargo ship somehow got stuck in the Suez Canal. New unemployment claims, continuing unemployment claims, existing home sales, new home sales, mortgage rates, and oil shipping delays are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be still want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the president, and the Congress. These 5 entities will do what they must to drive the market higher. Notice how oil and the market rose when it was reported that a ship got stuck in the Suez Canal. This seems like bad news for the market, but it actually drove prices higher. Now we are at our question of the week. What are US Treasuries? US Treasuries are US debt obligations. These are IOUs by the US government. That is, they are the way in which the U.S. government borrows money. Treasuries are generally issued that mature in 1 month, 3 months, 6 months, 1 year, 2 years, 3 years, 5 years, 7 years, 10 years, and 30 years. Investors are concerned with the interest rates associated with these U.S. government debt obligations, especially the 2-year, the 10-year, and the 30-year U.S. Treasuries. Do you own any U.S. Treasuries? Do you own any stocks? If not, why not? Are you afraid that the market may fall again? The market will fall again. When? I don't know. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is my trading watch list for the week ending March 27th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Verizon Communications, ticker symbol VZ. It's in the first column. It increased 3.45% for the week, and it was up 1.39% on Friday. Verizon is new to the list. Verizon is a telecommunications company that provides communications, information, and entertainment products and services to consumers, businesses, and governmental agencies. Looking at a summary of results, you can see that Verizon is actually down minus 0.97% so far in 2021. I did not trade or generate cash flow from Verizon this past week, but I am looking to generate cash flow from it soon. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is outperforming the S&P 500 index ETF SPY. The Southside portfolio is up 10.63% versus 5.91% for SPY, a difference of 4.72%. The Southside is beating SPY by 4.72%. This week, equities, including puts, calls, and ETF, make up 99.85% of the portfolio. That's virtually 100%. However, there's still some cash, which is 0.15%. The cash flow generated for this week was 1.25% of the portfolio account value. The account value changed by minus 7.64%. Meanwhile, the S&P 500 ETF SPY changed by plus 1.67% this week. I sold option contracts on 5 positions this week, 2 calls and 3 puts that range from $142.67 to $928.72. You can get more details, including the total dollar amount of cash flow for the week on the website southsideschooloffinancialfreedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Financialfreedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales, How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on lulu.com and amazon.com. Please like, share, subscribe. ADOS, ADOS.